I will begin by explaining about our consolidated performance. Operating revenue increased on strong inbound sales and higher revenue at domestic department stores underpinned by solid domestic consumption. Along with increased revenue from the year-long contribution of Takashimaya Vietnam, which opened in July 2016, and new consolidated subsidiaries. However, Takashimaya Space Create in the contract and design segment failed to achieve its targets, mainly because planned project orders were put off until the next fiscal year. Operating income fell short of the target despite increased profits from higher revenue at domestic department stores due to the impact of lower revenue at Takashimaya Space Create and the fact that new businesses are not yet generating sufficient earnings. The profit increase generated by domestic department stores did not make up for this decrease in earnings. Net income greatly increased, exceeding our target due to a reactionary drop in impairment loss from the previous year. Next, I will explain about our 2022 fiscal year targets as part of the Takashimaya Group long-term plan. Our aims for fiscal 2022 are operating revenue of 1.033 trillion yen in fiscal 2022 and operating income of 50 billion yen, and the achievement of industry-leading profitability, efficiency, and stability. While factoring in the effects of the shrinking domestic market and the increase in the domestic consumption tax, we will increase operating revenue by focusing on the domestic real estate industry and financial industry, as well as overseas businesses. While we anticipate higher expenses due to the revision of personnel-related laws and regulations such as equal pay for equal work and raising of the retirement age, we are aiming for 50 billion yen in operating income through sales reform at domestic department stores, business structure reform, and growth of our domestic group business and overseas business centered on the group business transformation project. Regarding ROE and ROA, we will aim for sustainable growth while ensuring a good balance between profit growth and investment. In terms of growth strategy investments, we will make strategic investments taking into consideration operating cash flow, including cash from the sale of assets. We will also reduce interest-bearing debt, aiming for total interest-bearing debt of 170 billion yen by fiscal 2022. Next, I will explain about our business strategy for achieving operating income of 50 billion yen in fiscal 2022. In the domestic department store business segment, we are aiming for operating income of 17 billion yen in fiscal 2022 through activities for our group business transformation project, along with our town development strategy, which includes Nihonbashi. In the domestic group business segment, we aim to achieve operating income of 25 billion yen by strengthening our real estate operations centering on Toshin development and our operations in finance, including Takashimaya Credit, and also by promoting business growth at Takashimaya Space Create, RT Corporation, and ANS Takashimaya Duty Free. In the overseas business segment, in addition to further growth in Singapore as the center of our Asia strategy, we will aim to achieve operating income of 8 billion yen in fiscal 2022 by making the department store operations in Vietnam and Shanghai profitable as early as possible, opening Siam Takashimaya in Bangkok, Thailand, and seeking early profitability. Next, I will explain our full-year projections for fiscal 2018. First, I will begin with our consolidated plan. Operating revenue is projected to increase through increased revenue at department stores in Japan and overseas, and the effective opening Siam Takashimaya, among other things. On the other hand, as I mentioned earlier about our long-term plan, we anticipate a profit decline of about 5 billion yen in the current fiscal year. This is mainly due to various investments for future growth, including 1.9 billion yen for the opening of the Nihonbashi Takashimaya Shopping Center, initial investment for the group business transformation project, and the opening of Siam Takashimaya. However, we expect these investments to result in a rise in operating income of 6 billion yen to 36 billion yen in the next fiscal year.